Taking a look at the charts today, we have equities trading higher. We've got the Russell up 1.4%, the Dow up about 1%, the NASDAQ up about 1.5%. So we're seeing a nice pop and a bounce today. We have been anticipating this. Actually, if we go and look over at our cycle analysis, you can see here, just draw a couple lines on here. We've been anticipating the market to rally higher. We had the low on the cycle low here, and we're expecting it to rally all the way into about looks like April 4th. So the cycles continue to kind of always evolve. You can't just pick a date and stick with it. These cycle highs and cycle lows, as different cycles fall in and out of favor, we're going to see that change. But overall, it is pointing to higher pricing still. And this is going to be what I think could be a dead cat bounce after this. It's interesting that the cycle is April 4th, or April 4th. The Trump comes out, I think, April 2nd with the tariffs. So there could be a turning point or a launch pad, really depending on how this market absorbs the tariffs coming into play and what will be there. But overall, market we're anticipating that upward move. We've been talking about this panic, this washout cycle low now for about a week and a half or 2 weeks, knowing that it's coming, and we're waiting for it to firm up and have that bounce. And that's kind of what we're waiting on right now, or actually starting to see. You can see on the futures chart, we've got a pretty big move up today. I'm not a big fan of gaps. Remember, the trend is down. We are going to gap higher. If we look at the 30-minute chart, we are going to gap up at 57.85. 57.85. So we're going to gap just above the 20-day moving average, just above these two other pivot highs on the chart from last week. And as we know, gaps tend to get filled. So we'll just have to see if today's pop gets sold into and fills that little gap. Again, it's just noise. This is not like a game changer or anything. This is just an opening gap, tends to get sold off into, especially in a downtrend. And that's kind of what we're looking for. So money's flowing into stocks today. It is flowing out of bonds. We've seen over the last 2 sessions, bonds open sharply higher and they've been selling off. You can see the futures chart here, even lower again today, trading down at 116, which is all the way back down, right down into this pretty much just oversold territory, back down where it dipped into this area before. So we're seeing that inverse relationship, stocks higher, bonds lower. Feels good. It feels normal again. But again, I don't think we can bet on the bond market starting a new bull market just yet. It's still in this giant bottoming formation. When we zoom way back, it is still carving out a bottom. It was in a downtrend. Now I would say it's sideways, and eventually it is going to start to turn higher here. If we take a look at some different assets, the dollar's flat. We are seeing gold and silver trade slightly higher this morning. Let's just zoom in. Gold has had a push and a pullback. It is pointing to potentially it might want to run up to around 3,200, which is the second half of this potential bull flag move. If this is a little pivot low, it might continue to push even higher. Again, we're bullish on neutral to bullish on metals. We're in that favorable time in the cycle where who knows how high gold will go. It's hit its last 2 targets. It hit its major target at 2750, 2800, which was back over here. And then we did see it go into a bigger multi-month correction. And now it is kind of that icing on the cake. Anything above this to me is just kind of, if you hold physical or hold gold still, it is still in a very strong uptrend. And this is kind of icing on the cake. Who knows how far it'll blow up and squeeze to the upside before having that bigger correction and pause with the rest of the market and economy. If we take a look over at silver, up 0.6%. It's had a really nice pop recently. It came up testing near the highs that we saw back last October. Kind of a bit of a waterfall, quick sell-off to a 20-day moving average. Typically, if you have a very sharp sell-off to a key moving average, which I believe the 20-day is a very key level, you usually have a bounce off that. And we're getting a little bounce off that today. It actually did something similar to that a couple of weeks ago. So we'll see if this bounces up. And I am still feeling like we're going to see precious metals with this uncertainty continue to rise going into April with all the tariffs and the uncertainty of all of that stuff. As we can see on the 30-minute daily chart, it has dipped into oversold territory as of Friday, touching the 20-day. And of course, it is bouncing higher up in pre-market this morning. If we take a look over at Bitcoin, Bitcoin up 4%. It has still a pretty bearish looking price action. Yes, it is above the 150-day moving average, which is this green line, but it definitely has put in what I would say here is a double top. And then it has broken this pivot low, so it's put in a bit of a top. It's broken down. It has broken down inside a bear flag. It's got another bear flag. This could easily be this rounding formation and still get sold off into at any point. So we'll just have to see how this unfolds. It is holding the long-term moving average, but again, this is like year-old data. I don't look at the 150-day as something to buy something at, or the 200-day, or the golden cross everybody talks about, where the 50-day crosses up through the 200-day. None of those strategies actually really work. Everybody talks about them, but they give you an idea if things are kind of overall bullish or overall bearish, but they're not generally technical trading areas, and they don't give you a whole lot of insight. So don't get too carried away. The longer the moving average, the more kind of garbage it is. It just tells you, is the tide rising, and is it on average where the price, should try to put in a bottom to continue to keep this moving average moving up or not. I don't trade, never have traded off the 150-day or 200-day. That is year-old data. Okay, let's take a look at the rest of the market. We've got natural gas down about 0.75%. It does look pretty volatile here. I would argue this is a little bit of we got a shoulder ahead with a big blow-off phase, a little broken limb shoulder, which is more so a bear flag, and it looks like it's on the verge of having a flush down and a bit of a sell-off. Natural gas, very volatile all over the place. If we were to look at let's take a look at the weekly chart and see what it looks like. Definitely has big volatility, has a big surge, sharp pullback, another big surge, sharp pullback. Maybe it's going to have one more big surge. Tough to say. Let's go back to the daily chart real quick here. I'm not a fan of this type of volatility. It definitely has had a few of these push up, sharp pullback, another one, and this one here was definitely a pretty bearish one, how it ran so high up and then got slammed right down, and now it's into a bearish pattern. Overall, looks pretty toppy to me. Our momentum chart shows it's gone from green to orange, which is a sell short. Its odds are it's going lower. It's going to turn red soon and be in a downtrend. So the short-term momentum has definitely turned south. Looking at crude oil, up 0.5%. Again, this still looks like a bear flag. Overall, we had an initial drop, and then it did a running correction. So instead of a bear flag going in the opposite way, it's just correcting as it goes, and then it has the second half of that move. Now it looks like it has a move down, and it has more so a bear flag formation. It's going to drift around here. It could very easily take a run and really start to move down just based on this chart pattern. As most of you know, I'm fairly bearish on oil and the economy, although we're not trading against the stock market yet. But this pattern here alone is pointing to about $60 on oil. And if we look at the $60 line and zoom out on this chart, let's just go to the weekly chart, get a bigger view. You can see that is going to very clearly break a critical support level. We got a critical support around the 66, which it's just creating a little bear flag from, and it could flush down, and this will be the next level. We got a couple wick lows down over here and some lows and noise, so that's going to act as a support level. It's also the 100% measured move, saying the selling should alleviate by that price. That'll be the cleanse. That will probably be a turning point for the energy sector stocks when oil breaks down. If we take a look at XLE, let's just has gone from a very strong uptrend and moving higher to now it is trading sideways and more or less a hit resistance last week at the upper end of this range. And I believe it's going to come back down. It's got about 9% to the downside. If oil breaks down, I think we're going to start to see this break down, and we could see a very big correction this year in the energy stock space. I mean, oil needs to break down. We probably need some bad economic data and for people to start to become bearish. And potentially natural gas breaks down and we could see this really collapse. So it's something I'm definitely keeping my eyes on as a potential trade used with an inverse ETF when or if that time comes around, which I will share with everybody when if we get that type of trade set up. Kind of like what we did in Bitcoin, one of these random one-off trades. Let's take a look here at the rest of the market. Long-term trend is still up. It is definitely looking like it's putting in a topping phase and stalling out much like it did just before the 2022 bear market. And so that is kind of where we are in the grand scheme of things. This market is hanging on to a thread on the verge. And again, our cycle analysis shows that we really have a couple more weeks, a week and a half of higher pricing, and then we could see a big break, a leg to the downside, which will definitely catch, I think, a lot of people off guard. Anyway, that's about it. We'll talk to you soon. Take care. Bye-bye.